Hi, it's Rob Beardsley with Lone Star Capital. We deliver monthly cash flow for hundreds of investors through vertically integrated and tech-forward Texas workforce housing investments. Today I wanted to make a quick video talking about how active versus passive investing is not a binary equation. But before we dive in, if you're interested in learning more about investing with us at Lone Star Capital, please click the link below to join our investor list and stay up to date with our latest investment opportunities. So back to the topic. So there's obviously many discussions out there about active versus passive investing, and I'm sure we've heard the many different arguments. But something recently that I thought of, which I thought was a really interesting and actually superior way to really transcend the noise of active versus passive, is to really understand the fact that these streams of income are not binary, right? When we invest in the stock market, it doesn't necessarily have to be active or passive. It can be either one, and it can also be a sliding scale, right? So if somebody who day trades, that's obviously a very active business for them in the stock market. Conversely, if someone puts money into an ETF, doesn't touch it for decades, that's obviously very, very passive. Or what about somebody in between? What about somebody who, maybe invests in a handful of ETFs, but also checks their stock prices daily and then maybe does certain, individual stock plays here and there, right? They're neither active nor passive. They're somewhere in the middle. And so I think transcending this idea and kind of thinking about things as more of a sliding scale and really on kind of like an effort or a dollar per effort return, or really valuing the return on time and effort spent, that really will give you a clearer picture on kind of the active versus passive nature of an investment. So, for example, you might think of actually real estate investing as a limited partner as a passive endeavor, but really it's not. Especially when you look at high level investors that are investing in many deals, right? They're tracking their deal flow, they're maintaining their relationships with sponsors, they're reading monthly and quarterly reports, they're managing their tax returns. Really at scale, it is not passive at all. So with that in mind, you would have to then look at, okay, yes, I'm investing my capital and I'm earning a certain return per year, and how much effort am I putting in to get these returns, right? And you can look at, how much time you're spending per year. It might be 5 hours, might be 50 hours, might be 500 hours per year. And so understanding how much time you're spending and what your return on that time is valuable, because then you can use a benchmark, right? Like, for example, if you could truly, truly passively invest in the stock market in an ETF, set it and forget it, let's just say you can earn 8% over the long term. And of course, there's tax implications. But to keep this example simple, right, you have 8% as passive as it gets in the stock market. And then whereas if you're active, you go out and source deals from sponsors, you get their deal flow, you pick the best investments that you feel the most comfortable with to invest as a limited partner, right? You manage all this, you read the reports, you stay engaged. That might take an extra 5 hours a month, or call it 50 hours a year, right? And so what's the delta? Right now, maybe you're getting 15% return instead of 8%. So that 7% delta, what does that come out in dollar terms? And then divide that by your time spent per year, and now you're getting a sense of what you're valuing your time on an hour basis, rather than just saying, well, these are my passive returns and then these are my active returns, and getting a less clear look at the picture. So I thought this was an interesting topic that I thought of recently, and really made me think about my own efforts and my own investing as well. I'm always thinking about, okay, how can I spend my time more wisely? And at the end of the day, you do have to circle back to that calculation of, okay, what is my time worth, and how can I best leverage my time to generate the biggest impact? Thanks for watching.